Now you've got people like, I mean, I was on vacation for a couple weeks and I was totally away and off the grid, but I did sneak a couple um, little things to listen to, and one of them was Larry Fink, right, head of the largest asset manager in the world, basically saying that Bitcoin was a good place to protect your assets from devaluation of the currency. I mean, literally, like your head explodes when one of the most powerful people in our business go ahead and says, this is a big deal.
BlackRock's application to offer a spot Bitcoin exchange-traded fund, ETFs, has been added to the official docket of the Securities and Exchange Commission as part of its proposed rule change process. The move, recorded late Thursday, advances the most closely watched Bitcoin-related proposal to the SEC to date. The application for the iShares Bitcoin Trust was filed nearly a month ago, prompting a new wave of optimism across the crypto market and additional filings for spot Bitcoin ETF from a number of other prominent players, including from firms like Invesco, WisdomTree, Bitwise, and Fidelity, which saw its previous application rejected last year, along with those from other contenders. When the SEC signaled last month that BlackRock's application was lacking, the company filed a revised application, adding a surveillance sharing clause that would involve the Coinbase crypto exchange monitoring and reporting possible illegal activity. Soon enough, Valkyrie updated its application with the same provision, as did Fidelity and ARK Invest. In this video, we will be joining Mark Yusko as he talks about the crypto summer and the recent happenings in the crypto space. He also shares his view on Bitcoin ETF, proclaiming boldly that BlackRock would be the first to get approval for the Bitcoin ETF while stating his reasons. As we now get into the video, make sure to hit the like button, subscribe, and drop your comments below.
And Charlie Munger one-upped him and said, trading in Bitcoin is like trading in newly harvested dead baby brains.
Yeah.
I'm like, Charlie, seriously, dude? And Jamie Dimon, it's a fraud. And yet he's got a whole team building, JP Morgan coin. Why? Why do they say this? Well, two reasons. One, you can judge the quality of the idea by the quality of its detractors. If people, you and I and people who are listening to this don't really care about or know about, don't like an idea, who cares, right? Probably not a very good idea. If people that we respect and admire and actually look up to dislike an idea, it's a really good freaking idea. And so that's the first thing. The second thing is, and I'll misquote this, but the capacity for someone to understand something and believe in it is inversely proportional to how much their paycheck is dependent on them not believing it and accepting it. And so if you're the largest asset manager in the world or the largest bank in the world, and along comes this technology, back to my socks, and look, there's a reason the first image on the Bitcoin blockchain is the London Times chancellor on the verge of the second bailout for banks. That's not an accident, right? It's not an accident that January 3rd, 2009, thank you.
Yeah.
January 3rd, 2009, that's not an accident, right? It's not like it was invented that morning. Satoshi woke up and finished typing. And no, there was a reason that this was all released in the middle of the global financial crisis and the banking crisis. It's because this technology makes the 800-year run of the trust industry superfluous, right? We went from a system where we needed trust. And I used the very simple example, and people are tired of hearing it, but it makes sense. Like if I lent you money, I wrote down in my ledger originally that, Jack owes me $100 and you come back to pay me back. I'm an unscrupulous guy. I've changed the number to 200. And you're like, no, I only owe you 100. And but Jack, this is the ledger, one ledger. So the Medicis came along and said, no, there should be two ledgers. Jack, you keep a ledger. Mark, you keep a ledger. But here's the problem. I'm an unscrupulous guy. And the Medicis, they're inventive. So I say to them, I'm going to change my number to 200 and I'll give you half. So you come back to pay me the 100. I say, no, you owe me 200. And you're like, but Medicis. And they're like, Jack, you must have written down the wrong number. It just looks like you wrote down the wrong number. It was totally corruptible, that system. And we know the system's corruptible The banks, the global banks, have paid fines equal to an amount larger than the market cap of Bitcoin.
And
Just
those
as a
fines
second. That's
probably
not the
yeah.
malfeasance. The malfeasance is orders of magnitude bigger than that. Like we know last year, JP Morgan got fined $960 million, almost $1 billion, for spoofing the price of gold. Well, why would they be willing to pay $1 billion fine? They're like, because we made 20 billion. It's like the cost of doing business. Awesome. We're just going to keep spoofing because you're not going to stop us by charging us, 5%. And so it's a long-winded way of saying Larry Fink was doing what he and everyone in financial services had to do.
A spot Bitcoin ETF would track the value of Bitcoin without requiring the asset to be held directly. It would also be tradable on a traditional stock exchange. While a Bitcoin ETF based on Bitcoin futures launched to great fanfare earlier this year, a spot ETF, which is tied to the current price of the cryptocurrency, has been described as a holy grail for the industry. The SEC continued resistance to approving one over the past several years has been described as a complete and utter disaster. With BlackRock's application now on the SEC official calendar, it will be published in the Federal Register and trigger a 21-day public comment period. Meanwhile, 4 other applications were docketed on Friday related to the CBOE-BZX exchange, which was the first entity to apply for a Bitcoin ETF in March 2021. They include the Wise Origin Bitcoin Trust, Wisdom Tree Bitcoin Trust, Vanek Bitcoin Trust, and Invesco Galaxy Bitcoin ETF, which will also enter a 3-week comment period. Mark Yusko shares his view on the Bitcoin ETF and why his favorite for the win is BlackRock.
I've said for a long time, like over a year ago on this show, that none of these ETFs were going to get approved. And look, I have money. I'm invested in Bitwise. I'm invested in Amun. I'm rooting for 21 shares. I'm rooting for Bitwise.
To get a
I'm
spot ETF.
Yeah, to get a
Yeah.
spot ETF. And I was like, none of them are going to get approved. The only one that will get approved is BlackRock. And people are like, oh, that's ridiculous. Here we are. And now everybody's saying, oh, but they're not first in line. I don't care. They are going to be the ones that get approved. And if that means they have to disapprove 21 shares, even though it's the same application, basically, it's not exactly the same. I think, again, I'm entitled to my personal opinion. I think they're going to do it. And, others are saying, well, they have to approve 21 shares if they want to approve BlackRock. No, they don't. They don't. Technically, they're first in the queue, but they can do what they always have done is just let it expire and then approve the next one. So we'll see what happens. But I'm still sticking with BlackRock will get approved. They will take the market share. And why is that important? Well, it's important because if you believe, as I do, that everything of the last 2 years was not an accident, that it was an intentional set of acts to disrupt the disruptors. As I said, we're in phase 3. Phase 1, the Gandhi quote, first they
Mhm, mhm.
ignored it. 2009 to 15, no one cared about crypto. No one cared in Washington, D.C. No one cared in New York City. No one cared. No, no. I mean, Jamie might have heard it from his daughter. Hey, Dad, this stuff's cool. He's like, whatever, go away. And it's a bunch of nerds and geeks playing with their magic internet money. Bitcoin is, I believe, in crypto summer, right? I think crypto summer started June 15th. Now, how bizarre. And I don't think anyone was paying attention to me. So that's not my point. But I thought it was bizarre. A few months ago, I said June 15th was the equinox. That's the day that BlackRock announces their ETF. I mean, that's
And
just
floated
total
higher.
happenstance. Again, I had nothing to do with it. But I just thought it was total. And that is literally the low in this, because there was a correction that was going on after the big rally from November. And that was the low. And so now we're in this, and summer is not parabolic, right? That's
Mhm.
fall. So they're the four
Grind
seasons:
higher.
summer,
You
winter,
think
fall.
grind higher.
Yeah. And so we grind higher. So we have higher lows and higher highs. And we head towards fair value. We've had Tim Peterson on the show, and Tim's awesome. And he has this Metcalfe's Law model. And, at the trough in the bear market, okay, last year, the fair value of Bitcoin got pretty low. It got down into the mid 20s. Today, same model saying we're back in the 50s. And so I think we grind toward 50 by the halving, then we go parabolic. But the caveat is there's not as much leverage this time. So I don't, last time the fair value was 20, we got to 60, 3 times. That probably isn't going to happen this time. This time, if fair value is 50, could we get 3 times above that? I don't think so. Could we get 2 times? Sure, for sure. And then you drop back to fair value and probably go below fair value in the next crypto winter. But here's the thing that I think is interesting. If you look at all the halvings, we basically 10x, and this fits the Metcalfe's Law curve. We basically 10x the total market cap. Basically, we add a 0. So from 100 to 1,000, 1,000 to 10,000. This will be 100,000. And then the next one in 2028 is 1 million. And that's just stupid. How can you even say that? I'm like, well, it's just math.
Some of the biggest and most established names on Wall Street are filing or refiling applications with the U.S. Securities and Exchange Commission in an attempt to be the first to release such a product. The Bitcoin ETF would invest in the cryptocurrency on behalf of its shareholders. In other words, investors could easily get direct exposure to crypto by going to their brokerage and buying shares the way they would a stock. Europe's first Bitcoin exchange-traded fund is expected to be publicly listed this month, 12 months after its planned launch. Jacobi Asset Management originally announced that its Bitcoin ETF was to list on Euronext Amsterdam in July 2022. However, it now says the fund is on track to launch this month, having decided that last year, the time wasn't right following the Terra Luna cryptocurrency crash in May 2022 and crypto exchange FTX collapse in November. The asset manager says demand has shifted since last summer. In Europe, all digital assets exchange-traded products so far have been structured as exchange-traded notes rather than funds. Each ETF shareholder owns a portion of the fund's underlying shares, while investors in ETN own debt security, not the underlying assets. Jacobi has made much of the fact that it is launching an ETF rather than an exchange-traded note. Peter Lane, co-founder and chief operating officer of Jacobi, told Ignites Europe last year that structured note issuers were guilty of misuse of the ETF term. There has been so much misinformation and misuse of the term ETF by ETN issuers, presumably to obfuscate the risks that are inherent in acquiring and investing in ETNs, he said. Jacobi said its ETF, unlike ETNs, cannot be leveraged or use derivatives, which could otherwise lead to significant counterparty risk. Do you think BlackRock would be the first to get the ETFs just as Mark predicted? Let us know in the comment section below. Also remember to like this video, subscribe, and turn on notifications. Thanks for watching.